The PSG Flexible Fund has an exceptional long-term track record. And as of the 31st of December 2024, the fund has delivered top quartile performance over 3, 5, 15 and 20 years. Now, we all know past performance does not automatically translate into the future. But what does this long-term track record actually mean for the investors invested in the fund? Well, since the current fund benchmark was adopted in November 2004, the fund has delivered an annualized return of 13.6%. And if you had invested 1 million rand at that time, as at the end of 2024, you would have had over 12 million rand. Now, joining me today to delve into more detail on how we manage the PSG Flexible Fund is Fund Manager Shaun le Roux. Shaun, to kick us off, can you maybe remind us of the objectives of this fund, what it is trying to achieve, and who it is suitable for?
Audrey, nice to be with you. The PSG Flexible Fund, as you suggest, has returned almost 14% per annum for 20 years. So clearly, this is a fund that's orientated towards capital growth. So it's for clients that want to get returns that are well ahead of inflation. And in the case of the PSG Flexible Fund, it targets inflation plus 6%. So we're very proud of what we have achieved. But importantly, we position this fund as a mandate that is looking for equity-like returns, but taking lower levels of risk. And this explicitly means that it's targeted at a client that wants equity returns, but at the same time is risk cognizant.
So Shaun, the PSG Flexible Fund is classified as a multi-asset fund, which means that it's got access to that broader toolkit. Now, give us an idea of how you allocate assets within the fund.
Well, equities need to do the heavy lifting to generate superior capital growth. But primarily the fund will be using a combination of equities and cash. Cash is an asset class that we really like. We think the value of cash is significantly underestimated. What it does is it offers risk protection and capital protection at times when we think markets are expensive. But probably more importantly, it's a source of dry powder when opportunities arise, and they inevitably do. We also have a deep multi-asset capability within the team. So when there are other asset classes that offer opportunity to improve the risk-adjusted returns for the fund at a portfolio level, we're going to reach into bonds and property as well. But primarily, it's going to be a combination of equities and cash.
So Shaun, looking at the latest fund fact sheets, the cash levels in this fund are still at relatively low levels compared to what you've had in the past. So give us an idea of how you're managing this fund at the moment.
Audrey, you're right. Cash levels in the PSG Flexible Fund are currently low and quite a bit lower than they've been on average over long periods of time. The reason for that is pretty simple, that our process and buy lists are indicating good opportunity for capital growth, and we want to be reaching for those. But at the same time, we're mindful of the fact that we perceive a lot of broader macro risk, particularly connected to the US market, which is by far the dominant stock market in the world. And it's also a market that is expensive and where there's a lot of complacency. So we are mindful of the need to protect client capital and to manage risk. But we don't think that currently the appropriate way to do that is run with high levels of cash and forgo some of the potential upside that we see in markets outside of the US, and particularly in a market like South Africa. So what we've done is we've preferred to manage that risk via alternative measures. We've got a hedging program in place, a derivative program. The PSG Flexible Fund also owns things like gold shares and energy shares, which we think are going to be a very, very important source of protection against the world of the future as we see it.
So Shaun, the PSG Flexible Fund has an exceptional long-term track record, as we discussed initially. But What do you think is it that sets this fund apart, and what is the unique proposition that it brings to the market?
Yeah, we're proud of the track record. We think it speaks to a consistent process. We think it speaks to an experienced team, but probably more importantly, it speaks to a team of individuals that are prepared to look into unloved parts of the market, buy when there's a lot of fear around, and be patient. And then conversely, avoid the parts of the market where there's a lot of euphoria, where people are being greedy, and just rather sit in cash or sit in other parts of the market.
So Shaun, it sounds like it's going to be another challenging year. And having a trusted team managing your fund in circumstances like that is more important than ever. So looking ahead into 2025, give us an idea of how you will be approaching this market and where you will be finding opportunities for the PSG Flexible Fund.
Yeah, Audrey, I hope you got your seatbelt on. It's going to be an interesting ride. We kicking off with a new administration in the US, and that's going to certainly be very interesting. I guess the issue there is there's a lot of complacency. So the markets have fully bought into the fact that any policies that come out or any macroeconomic developments are going to be positive. We'll see. We anticipate uncertainty and volatility. And when we see valuations like we see in a place like the US, we would tend to be a little bit more risk cognizant. And our clients don't own US stocks at the moment. And then we contrast that with other parts of the world where we don't see complacency. We actually see very low positioning and a lot of fear around. And typically, we've always been good at leveraging fear to our clients' advantage. Our buy lists are pretty full. They are indicating very good opportunity for capital growth in places like South Africa, but other unloved markets like the UK, more recently China, and other emerging markets. So we're adding capital into those places. We're prepared to be patient, but we think we've got the building blocks for good returns for our clients. So we're broadly positive, but I think it's appropriate to expect some volatility and somewhat of a wild ride in 2025.
Shaun, thank you so much for joining me today and sharing your insights into how you will be managing the PSG Flexible Fund in what we know is going to be a challenging and interesting environment.
Thank you, Audrey.